Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, October 2nd, 2009. Well, folks, we saw more downside early on in this market, and the markets are slightly lower on the day, but that does not even go to the extent of describing what went on this morning with the craziness of the jobs number. We got the unemployment rate today that still stayed at 9.8%, but the expectation had been between really about 200,000 on the lost jobs. Goldman Sachs had said 250. It actually came in even higher than that, shocking the markets initially today, and the markets did dump pre-market. That number came out at 8:30 a.m. Eastern Time, and the markets just absolutely got slammed on that number initially. You saw the futures going down about 10 to 12 points just on that number alone on the S&P, as the markets overall opened down on the Dow about 100 plus points. Now, the key to this is a couple levels, folks. I've gone over this to the premium guys, and I'm going to kind of give you guys a little insight into what we've been talking about because I think it's that important to know. Now, you have some major levels on the charts that you are looking at in front of you. This is the 10-minute SPY, again mirroring the S&P, and what you need to know about this chart is the key levels that I'm going to talk about right now. Number one, as a master level, when we talk about the daily chart, you have to look at 104. Now, 104, I'm going to show you the daily chart, and this is going to be a little insight. This is the 104 level right here, and you guys can see it right here, right above in green, kind of stretching across the charts. Now, you have to know that level is a master level, and we've talked about that to our premium guys, alerting them to it. Now, the key to that level was that we said when you break that 104 level, when you close below that 104, whether it be intraday and confirm it or on the daily chart, you will go to 102. That will be your next master support level. And you can see right here, and this is the exact chart that the premium guys see, folks, by the way, just so you know. So this is a level right here at 102. Now, I'm going to go back to the intraday. I don't want to show you guys don't get to see more than that because this is a free video. I just want to express to you that level. Now, that same level is right here in the dotted line. That level, look at how this was broken yesterday. We got below it, and we couldn't get back above 104 as we hammered on it here yesterday in the afternoon, pulled back to 103.50 support, up again. Now, remember, the master support levels are from the daily. Those are the big ones you had to know about. So again, there are intraday other levels in between, but those are the master ones. Those are the ones where you see the biggest moves off of them. So again, 104 gets broken late morning yesterday. We tested early afternoon again on the upside, could not break through. Come back to 103.50 on the SPY, move back to 104, again cannot break it, and then close below it. That's your signal, folks. This market is going to 102. We talked about that to our premium guys last night in the video, and we've alerted obviously to the master levels for the last month or two. I mean, I've talked about 102 and 104 on the SPY probably for the last 6 to 12, literally weeks of the past. They know it, ingrained it in their heads, and again, you need to know this stuff. This is important. But in any case, once you got below that 104, guess where you're going? The next master level. What can you do at the next master level? The next master level is a master support level. I mean, that's what it is. You can be a buyer there. What is the market open at today? What is the absolute open on this market on the SPY? 102.02. Do you lower the day 101.99? Does that remind you about that 102 level, master level right here in white? Absolutely, folks. This was a dead-on nail to this point. You have to look at these levels and understand exactly what they mean, and sure enough, you can see how the master level gets broken, and then where do we go? We go to the next master level. What happens off of that? You can get a bounce, and you can see the market rebounding off of that. Look at the move. You could have bought right here at the open off of a master level that we talked about, and a move all the way back to 103 plus goes through. That's $1 on the SPY in literally an hour or so of trading this morning. Easy money, folks. Easy money. In addition, I want to alert you all, I unloaded more of my short ETFs today on the gap down. Why did I do that? Think about it logically. Why would I do that? Well, obviously because we just came down to master support. So I unloaded the rest of my FAZ, folks. We're talking about now over $5 profit on my multiple positions on the FAZ. I've unloaded that. Now, I'm still holding other shorts, obviously, but I unloaded SRS today as well. Some SRS done. It's gone. More profits on SRS as that thing gapped up and went to, I believe the high was 11.01. I unloaded at $11 right at the open there. Beautiful one right there, folks. You got to know this stuff. This is key. So again, unloading some into a master level is that way you have to be a trade. Remember, you don't want to let emotion cloud your judgment. This is a technical game. There's a reason why there are computers programs that Goldman Sachs uses and some of these other big firms use, and that's because they don't let emotion cloud their judgment. Who cares what the jobs number is? All I know is it went to the master level at 102 on the SPY, and from that, bam, done. All right, you move out. Guess what? You can short it again when it bounces back up. That's fine. You just want to take maximum profits into levels and understand your technical levels. So, again, folks, jobs number poor this morning. That came out at 8:30 a.m. The futures dumped hard into 9:30. 9:30, we gapped lower. You could have unloaded some nice positions on the short side there like we did. Again, our premium subscribers were alerted to do that as well, and possibly, and I also said yesterday in the video, I said go long at 102. You go long at 102, you're going to be golden, guys. I said that's a master level. What are we at right now? Even if you had held all day, you're still up 70 cents on the SPY from that 102 level as we're trading here at 102.70. Great trades, folks. Unbelievable stuff. In addition, the key is I also posted on the hot charts and alerts last night, which is part of the Research Center. And by the way, everything in the Research Center is included in that $49.99 price per month. But I posted Goldman Sachs on the Research Center, along with JP Morgan, Morgan Stanley, Wells Fargo, all the rest of them I posted. What did I say? I said there are key levels that you're going to be coming into on these charts that can be buying opportunities. All right? And again, I talked about $75.50 on the Goldman Sachs. I also talked about JP Morgan. Look at JP Morgan. I highlighted, and this is the exact line that was on the chart last night that I gave out to the premium guys. I said, this is your support line. You can be a buyer of JP Morgan right here at this line. This is where we closed yesterday. I said, if it comes down here, that's your buying opportunity on JP Morgan. Look at the gap down. We gapped right there. Look at the move up from there. That's a good dollar, close to a dollar move plus, actually more than a dollar move on JP Morgan from that gap down. That's an unbelievable trade there, folks, from $40.50, $40.75 area all the way back up to about $41.80 right now, over a dollar move off that alert. And that was on the hot charts and alerts, folks. So you can see there's little parts to that. Again, Research Center's 40-minute nightly videos new every night, technical tactics, hidden gem plays, daily market reports with key levels on gold, oil, and the rest. You have the hot charts and alerts, which posts like this one out on to make money. So many variations there. In any case, let's go back to the SPY. I want to cover a little more on the intraday here to what to look for. Number one, the gap down to 102, that's your buying opportunity. You move up beautifully, then you have inside bars. Inside bars dictate from an up move like that. That's a bullish consolidation, in spirit of bullish consolidation. From that point, you look for more upside. Sure enough, the market moves up. Where do we go? Gap fill. What do we know about gap fill? Gap fill is a major resistance level, right? Gap fill is always a resistance area. Especially when you gap down that much, you will always have resistance. What can you do there? You can short it. The call goes out to short it. Bam. What does the market do? Pulls off beautifully. We consolidate here. They attempt to break it lower here, and it fails. That's a good signal here. So you fail here. You see you start to break lower, and then you have a nice reversal candle right here in green. That's a bullish signal. The market then closes above the 20. We're now consolidating above the 20. That tells me there could be some upside afternoon activity as well off of that level, so watch that. Again, if you stay above the 20, look for a move back to the highs of the day. Also gap fill again at 102. That would be at 103. 103 would be the move there. That would be a 30-cent move up to take us into this pink trend line right here. If you get through that, you're going to look at the 50 moving average, and if you get through that, you're going to start looking at 103.50 and ultimately 104. 104 as a master level on the downside will be resistance on the upside. You can watch that just as well and watch for the move there as well. So again, minor little bullish pattern here. Again, if we were to close below this low right here that we just put in, then it would become bearish and you'd look for a double bottom. That double bottom can be played this afternoon for a scalp again. It would be a beautiful scalp, most likely a high percentage trade anyways. So these are all different levels you want to look to play, and you have to really just, this is the key, guys. It doesn't even take a genius. I'm telling you, price, pattern, and time. All those signals, very easy to learn, no crazy mathematics involved. You can tell where the market's going on daily charts, weekly charts, monthly. It applies to all time frames. That's the beauty of this. I focus on the intraday because I can't give out the daily, weekly, monthly charting levels because that's premium guys, you know, the Research Center guys, chat room guys, webinar guys. By the way, webinar this weekend, you do want to sign up for that. You're insane not to, in my opinion, based on the fact that you will be understanding this market. You'll take it right into Monday and be able to swing trade, day trade, invest off of the stuff we teach you. Counts, cycle work, you name it. You're going to come out an amazing, much more rounded trader investor. Again, in any case, know this stuff, folks. If you learn it, you will succeed. It's just that bottom line. You study it, you learn it. Doesn't take a genius. I'm telling you, I'm no genius here. I'm good at what I do, but that's about it. And I learned it, and I'm profiting from it substantially. Learn it. We'll see you in the webinar this weekend. Join the Research Center. Join the chat room. Take care.